Hello, traders. FX Pip Collector here. Today is Friday, January 24th, and this is my morning video where we look at the US dollar pairs, including gold, and we take a look at a few of the JPY pairs. If you haven't done so already, definitely join my free Discord trading community. It is 100% free to join. The link is at the end of this video up here, and it is also in the description of this video. If you would like to join my membership, it is only $30 a month and it gets you access to all the benefits that you see listed below, scrolling across the bottom of your screen. So anyways, the first thing I like to do every morning is definitely check out the news calendar. We had today is the big PMI day that we have every once in a while, like once a month or whatever it is. And we had all this PMI come out today for the euro and the pound, and then this afternoon we got PMI for the US dollar. We also have consumer sentiment, but this is the revised consumer sentiment, which normally has a lot less impact than the primary consumer sentiment does. But this PMI is definitely a pretty good news event, and I would expect to see some pretty decent moves out of that. A lot of the dollar pairs are moving pretty strong already today, so it's going to be interesting to see what this actually ends up doing at the PMI news later on today. So looking at the US dollar index, which is where I always like to start off, we had another push down on the dollar, which is not surprising at all. We went all the way down to structure. Now, I would still assume that this first push down is most likely a wave A, or maybe possibly a wave 1. Where does a wave A or wave 1 normally end? It normally ends at the previous structure. So we are at the previous structure, so it is a likely place for this to possibly end. One, two, three, four, 5 waves down also. It does seem pretty likely that we would get a pullback, maybe starting today for like a wave B or possibly a wave 2. So if we get a pullback for wave B or wave 2, then you would expect the same type of move on all the dollar pairs except for gold because gold doesn't really care about the dollar. So anyways, moving on to the euro dollar. The euro dollar broke structure very strong today. A lot of that is because of the euro PMI news that we had this morning, but very strong break of structure. That break of structure right there tells me that the whole trend that started here, not up here, but the trend that started at the end of the last correction is over. So what I did now is really I would say that the series of lower lows, lower highs actually starts right here. So I put my Fibonacci retracement from here to here just to look for areas of resistance. If the US dollar is going to go up and make a wave B or a wave 2, then I would also expect this to probably go down and make a wave B or a wave 2, and that this would still be a wave A or a wave 1. Now, I personally am not really too interested in going short for wave B or wave 2 anymore because now that we got the breaker structure up, I think we primarily need to be looking for longs. Because what happens sometimes when you get a breaker structure, all you have to do is look at the pass and see. Sometimes when you get that breaker structure, you think it's a correction and it just goes and goes and goes and goes, not really looking back. So there is a possibility that this just keeps on drifting up today. So I would be very cautious about trying to go short. I would be looking for longs for sure. Going down to the 1 hour time frame. Now we're not at a Fibonacci level. If we zoom out far enough, that is, we'll see that we're not at a Fibonacci level. We definitely don't have a break of structure. The only thing that would even remotely, even possibly make me think that it would be a good idea to go short is if I had a Fibonacci bounce and a break of structure to the downside. If I see this picture right here, then maybe you could try to go short and trade this ABC of B, which would probably end up playing out something like this for an ABC of B or an ABC of 2. But like I was explaining on the daily time frame, I personally am not really that interested in going short anymore because even though you would expect something like this, sometimes when you get that breaker structure on the daily, it just runs away and it just keeps on going and going and going and going. So I personally would definitely be focused on looking for longs at the end of pullbacks. Moving on to the pound dollar. Now, the pound dollar definitely has a broken structure like some of the other pairs, but it has the same shape as the other pairs, as the US dollar index and the euro dollar, which I think is very clearly 5 waves up. Now, just like the other pairs, you would kind of expect it to turn down and make like a wave B or a wave 2, and this would be a wave A or a wave 1. So it still could be an ABC correction to the downtrend like that, or it could be a possible trend reversal. Luckily, I trade a wave A and a wave 1 exactly the same. I trade the wave 2 and the wave B exactly the same. I trade a wave 3 and a wave C exactly the same until we get to that crucial point where we're trying to identify the end of a wave C or a wave 3. So going down to the 1 hour time frame, Now, just like the euro dollar, I would be very cautious about even thinking about going short right now because of the break that we're getting on the other dollar pairs, including the dollar index. I personally would have to see a Fibonacci bounce, a double top, and a break of structure before I would even remotely even think about going short. And even if I see that picture right there, I mean, I'm still not really too convinced that looking for shorts is a good idea right now because this could be the beginning of a big turn on the very high time frames. I would expect something like this to happen, but I personally would be looking for longs because there is a chance it just goes and goes and goes. So if it just continues to make higher highs, higher lows, if you never get that break of structure at a Fibonacci level, then just continue to look for longs every chance you get because we may have a turn to the upside on the dollar index and the trend is your friend. So moving on to the Aussie dollar. The Aussie dollar also broke structure, in my opinion, in a very strong way today. Now that we have this break of structure, we know for a fact that this whole trend right here is over. I still think that this move up could be a wave four, and that this likely is a one, a two, and a three, and we could be in a wave four right now, and this could end up over the next several weeks doing something like that and making another push down. But now that we have that clear break of structure, I would be primarily focused on longs because sometimes when you get a break of structure, it just goes and goes and goes. This thing could literally just go all the way up to the weekly time frame structure before we actually do get a break to the downside. So bringing it down to the 1 hour time frame, just like the other pairs, I'll be paying very close attention to my Fibonacci retracement levels. We have the 38% Fibonacci retracement coming up. If it goes up to that level, it makes like a double top, break a structure down, then we would probably know that the wave A or 1 is complete, and that we're probably going down for a wave B or a wave 2. But I would have to see a very clear picture like this to even think about going short. Because even though you would expect something like this to happen, what may be more even likely to happen is it bounces from a fib level, makes another higher low, goes up, bounces from a fib level, makes another higher low, and just keeps on going. If this is really the bottom of the market down here, which it could be, this thing may just make higher highs, higher lows, and just take right off. So I would be looking for logs at the end of every pullback. The trend is your friend as always. Moving on to the US dollar Canadian. US dollar Canadian is still in an extremely sideways range. If it breaks down out of this range, then I'll be more than happy to start looking for sells because that would probably be the end of this wave C on the much higher time frames. But until it does actually do that, I would still consider to be very, very bullish because I still think there is definitely a chance, especially looking at the higher time frames like the weekly. I honestly think at this point there's a pretty good chance it might even go up to the 100% before we get the real turn. So keeping that in mind, I would be very cautious about going short, especially until we get a break and starts it down. Moving down to the 1 hour time frame, we got the little 1, 2, 3, 4, 5 right here. If it starts to turn back up and break structure, I'm definitely going to go long because this definitely could either go back up to the top of the range, which would be a good trade, or it could break out of the range and just keep on trending up on the daily time frame, like I was showing you, up towards that 100% Fibonacci extension. So unless it breaks down below this level, I am definitely very bullish. So moving on to the US dollar Swiss. So the US dollar Swiss is actually still one of the ones that I still think is likely to make another push up at some point. Most wave A's or wave ones do take out the high wave four, which we never did do. So there's definitely a possibility that this is 5 waves down, it makes 3 waves up, it makes 5 waves down, and then it goes back up, grabs these highs, and then turns down for the big wave B or wave two that we have been waiting for. So be cautious in assuming that these markets are really turning in a big way because they definitely don't have to be. So going down to the 1 hour time frame, I still got my Fibonacci retracement on this whole move up right here. And honestly, we are down below the 78%, which is actually not a very good sign. But as you can see, it really hasn't been able to hold below that level yet. And to me, it looks like 5 waves also. So I would kind of expect that the next move would be up. But the next move up would likely be a crutch into this last move down. So this would be like an A, and this would be a B, and eventually it probably would go back down for a C, which would probably break structure, reject structure, and then probably go back up, like I showed on the daily time frame. So I am definitely still very bullish on this one too, unless it goes down and breaks structure, then I'll be happy to start looking for shorts at the end of pullbacks. Moving on to gold, man. If you've been following along with our gold analysis these last few weeks, you've definitely probably been doing pretty good because we called this pretty well. It's probably been about 2 or 3 weeks now. I've been saying that this thing is just going to keep going, making higher highs, higher lows. My target has been this 105% Fibonacci extension for a long time. We are now at my target for a possible end of a wave B. That definitely doesn't mean that I'm just going to go short, assuming that it's going to go down and make a wave C, even though I do expect it likely could turn down. But for me personally, I need to see proof of a turn. I need to see an impulsive move down. I need to see a break of structure before I am going to start going short. Because wave Bs don't have to stop at the 100. They can go up to the 123. They can go up to the 138. And this could even go up and retest these highs and break these highs before it turns down. So I would also not assume that this is turning just because we're at the target, which is 100% Fibonacci extension. So going down to the 1 hour time frame, to be honest with you, the proof that I would need to start becoming bearish is actually way down here. I would need price to go all the way down, break that, then hold below it, then make a pullback, then I would look to go short right there. That is the only thing that would turn me bearish is seeing a nice break of structure like this. Because even though we're at 100% fib extension, this could literally just go down, make another three-way pullback, make another higher low, make another higher low, and just keep on going up. If it does start to go down and break this little structure right here, I would throw my Fibonacci retracement on this move, which it hasn't done yet. Then I would look for if it makes a three-way pullback and then a pulse to move up at a fib level, or if it just keeps on going down, giving us a break of structure, which, like I said, would turn me bearish after the break of structure and after the pullback that would come after the break of structure. So as always, pay attention to your fib levels, pay attention to your structure. You'll probably be trading in the right direction. US dollar yen, we had yen interest rate news last night, which they did raise interest 25 basis points, which was not a surprise to anybody because that's what was forecasted. The trend is definitely down on this right now, so I would be a little cautious about going longs, but I do think that it looks like a possible ABC correction, like an expanding flat. So if it does turn up and give us a break of structure, we definitely need to become bullish again because it might just keep going up. But as of right now, the trend is down. The trend is my friend, so I'm definitely looking for shorts. And if I'm looking for shorts and it just makes lower lows, lower highs, lower lows, lower highs, going down for this wave C, which is part of an a B, and a C correction on the weekly time frame, probably an ABC of 4. So I'm definitely still looking at this as possibly going down and making this big wave C of wave 4. But if it does break structure up, I'll be more than happy to start looking for longs again. No matter what our analysis is, we need to just go with the flow because the market is definitely the only one that knows what's going to happen. So yeah, like I said, if it goes up and starts breaking and holding above structure, I would definitely turn bullish. If it just turns up and then makes like a lower high, I would definitely continue to try to go short if it continues to make lower lows, lower highs. Even though it looks like an ABC, like I said, the market knows best. And if the market doesn't give us a break of structure, then there's no proof that this is the end of an ABC. And if there's no proof that it's the end of an ABC, it might just continue to make lower lows, lower highs, and just continue the downtrend. Moving on to the euro yen. Yeah, the euro yen definitely broke structure up to the upside, which actually, like I've been saying, it would make more sense for this to go up because it would make for a much clearer pattern for this to be 1, 2, 3 waves up, either go up and retest these highs or make a little bit of a lower high and then go down. I still think the wave B is finished over here, and I still think this is going to be like an ABC correction to the last impulsive move down. So it would make more sense for this to go up and take out these highs, maybe retest these highs, and then start the big move to the downside, which likely will be a wave 3. Like a wave 1, a wave 2, and a wave 3 of wave C, I believe. So and we do have a break of structure now too, so definitely I would be bullish. Now that we have that break of structure, which actually it did break and hold below structure a couple of days ago. After it broke and hold below structure, above structure, that could have turned you bullish. And I bet if you had your Fibonacci retracement on here at the JPY news last night, you would have seen a nice fib bounce and a nice entry to go long. Now, I definitely wouldn't try to go long now, and I definitely wouldn't try to go short. I would only be looking either for an exit, or I would be looking and waiting patiently for more pullbacks, preferably three-way pullbacks, to go long again for the continuation of this uptrend. Moving on to the pound yen. The pound yen is still quite a bit weaker than the euro yen because of the pound weakness. I personally don't really think that it's going to go up and retest these highs, but it definitely could. And now that we have a break of structure, I would definitely be looking for longs. Like I was just saying about the euro again, it would make more sense for this to go up and do something like this. It would make for a much clearer ABC pattern. Now, wave Cs don't have to take out the higher wave A. It could end up making a lower high, but most wave Cs do at least retest the wave A or even take out the wave A. Moving down to the 1 hour time frame, we definitely did have a break of structure to the upside. Then we had a pullback. Then we had a rejection of this structure at the news last night, and then another nice little push up. So I definitely, just like the you again, wouldn't be trying to go long now. I would only be trying to go long when and if it makes a pullback. I would not be going short. I would be looking for three-way pullbacks to go long. You know, something like this, one, two, three waves down to go long for the continuation of probably a wave C of wave two, or maybe a wave C of this wave B on the much higher time frames. So as far as all these other pairs are concerned, I do analyze every single thing on this list every single day for my premium members. I do Zoom meetings every Tuesday, Wednesday, Thursday, and Friday, 90 minutes to 2 hours long. And I share every single trade I take with the members at the time of entry with stop loss. I don't know necessarily use take profits most of the time. I get out discretionary. So if you would like to check out that membership, then you sign up by joining at my website, fxpipcollector.com. It is only $30 a month, a very, very cheap membership because I want it to be affordable for pretty much everybody. If you would like to just join my free Discord channel, which I'm more than happy to do, so then check out the link at the end of this video and in the description of this video. 100% free trading community. So anyways, as always, I hope everybody enjoys the rest of the day and happy trading as always.